Thank you to Shannon and River and the whole Columbus Bitcoin Meetup crew. So my name is Nick Ward. I'm from Cleveland, still there today. I went to John Carroll University, but I enrolled and was accepted to Ohio State, but decided to wrestle and was certainly not good enough to wrestle at Ohio State. So I didn't end up coming down here. My little brother did though, so I spent probably close to almost as much time as I would have anyways. He was younger, so right when I got out of college, then I came down here every weekend, sometimes on Thursdays, and hung out and enjoyed myself. So, but thank you to River, Shannon, and the Columbus Bitcoin Meetup crew, because it's been awesome. I'll talk about my background, but been working in the space since 2017. And when I first entered it, I thought, would I have to move? And I was married at the time, had my first daughter. We have a really strong anchor here, so I didn't want to do that. And when I say move, I mean, out West Coast or New York, where this industry potentially would be. So when I found these guys and what a strong crew it was, let alone great company, one of the best in the space, River, it's been awesome. So thank you to them 100 times over. And they've welcomed me, and about a year ago exactly was the last time I spoke here, which was 6 days into us founding the network firm. So I've been in public accounting my whole career. I started out of college in 2011, did mostly construction companies and nonprofits. For me, went to college, was taking out loans to do it, kind of liked accounting class I had in high school, thought, all right, I can do accounting, and kind of generally take that as a good base in anything business, plus needed to make sure I had a job with the loans, obviously. So wouldn't say I had a huge passion out of the gate for accounting, but definitely liked it. Started working. My father was a carpenter, so I grew up in the construction trade, so get into like, oh, I know this industry. I grew up in it, but I don't know the accounting, and to start my career there was great. It gave me kind of an appreciation for accounting with industries you actually care about. Fast forward to 2016, I had one of my best friends tell me to, buy Bitcoin. He's like, you got to check out Bitcoin, and other cryptos too, but he didn't study hard enough. But I did what most people did. I kind of Googled it, saw Silk Road stuff, talked to financial advisors in our firm. They're like, no, that's nonsense. And kind of went on with my life for a few months. And then it was early 2017 where he starts asking me all these like pointed tax questions about like what he's supposed to do. And I'm like, nobody cares about this thing. What are you talking about here? And then he had done significantly well in terms of the USD appreciation. And I said, all right, what is that? Like, explain this to me again. Like, why would this thing appreciate? And really, again, a lot of what I did do tax, but mainly my day job was auditing. And he showed me a block explorer. So he pulled up his wallet, and there was every Bitcoin transaction he had done in it. I could click on the wallets he sent it to, the wallets it came from, and that was it for me. I can picture the moment in my basement when we did this, and I ordered. It was Bitcoin Standard, Mastering Bitcoin, which I obviously got like 30 pages into, and was like, okay, this is way above my head to start with. And then another like crypto economic book or something. But just from an audit perspective, it was like, all right, this is amazing. And then from there, started to just learn as much as I could. I wish I could tell you I dumped everything at that moment and bought it, because it was like $1,000 a coin, but I barely bought any, frankly. I just was like, all right, I want to learn as much as I can. What I really, if you know Pierre Richard, I think he's at Riot now. He was a CPA in his former life, but he had a lot of blogs about kind of that auditability of the network. Not just what I saw with the Block Explorer, but like the ability to run your own audit that, yes, there's only going to be 21 million, and the mining reward is on this schedule, and you can check that and then verify it in real time with the blocks. And so, again, as an auditor, that was it. So what I always love to remind everyone is that, you're all Bitcoiners, but if you like Bitcoin, you're an accounting nerd, because at the end of the day, Bitcoin is an accounting innovation. It was 1401, double entry bookkeeping. If you're familiar, all that is that every time you have a transaction in your business, two accounts are going to get hit, they balance. We've been using that for 700 years, literally that long. And here comes Bitcoin, and you've probably heard the triple entry bookkeeping is what it did, is because it's basically wallet A, wallet B are going to update, but also the network ledger is going to update. And you literally have, for the first time ever, this ledger that no one has to just trust that it's right, or they can audit it themselves, and they don't have to hire a huge accounting firm and pay all these fees to audit it and hope the accounting firm does a good job and unturns every rock. Can literally run a node, run the software, and check it yourself. So yeah, at the end of the day, it was just awesome to me. And ultimately, all the different things we can do with Bitcoin, all the different ways it has value, for me, this is it. Like, this is the value case, right? This central ledger that completely replaces a government, a state having to maintain the money books, and we have to trust them not to increase supply, all that. Like, we have this now to ultimately settle in at the end of the day. So with the I guess I'm jumping ahead, but was at a regional firm in Ohio for first 10 years of my career. They got bought by one of the top 15 firms. Spent a year there, and around that time I was helping my buddy. We started a little digital asset practice before the big firm bought us, but and they didn't buy our practice; they bought the whole firm. But really was just helping people with taxes was kind of the low ball fruit. Started to meet some minors that may have taken us into audits, but never did that work there. Probably the only like a test related thing I did was in a state out of California. Someone passed away who had Bitcoin. The lawyer had no idea what to do with it. We had some blogs up over in Cleveland, Ohio, and at the time we were the only ones who did. And so he had us basically go verify XPubs and look them up and tell them what was in there. And again, we're telling this guy, we're like, you could just do this. Like, you have the XPubs, you can go to Explorer, but they paid us to do it, so it was great. So was at a big firm, went to a smaller firm briefly, then another top 20 where we were dedicated to digital asset practice full time. In the wake of all the 2022 turmoil, that firm, like most CPA firms, backed away from the space due to really the risk in terms of the rest of their practice. And then another reality for accounting firms is if you're going to work in this space, your insurance premiums went up. Now, I have heard some positivity there that last year that's all insurers wanted to know, and this year they're not even asking about it. So that's good, but that was the reality. And so our team was like, this is what we want to do. And so we founded the network firm. I have 3 co-founders. There's 10 of us that went over, a couple developers, because we do a couple things. We're traditional CPA services in terms of attestations, so not full financial statement audits. These are very specific terms that only really we care about, but it's important the public understands that we're not doing the full audits. We do examinations, then agreed upon procedures. Basically, agreed upon procedures are just, here's what the procedures are, here's what our findings are. We're not giving an opinion, we're just, it's very up to the user to say, is this relevant to you or not? And the reason I key in on those is we do proof of reserves engagements. So those are taking a snapshot of, a company like River or an exchange that custodies digital assets for someone, Bitcoin. We'll verify ownership, that they actually control the wallets. Certainly can never verify that no one else has the keys, so that's just a risk that's always going to be there. But we can verify that they have ownership, take a snapshot of how much they had, and then compare that to customer liabilities. And again, we felt that this is a positive, offering to the space. If people want to do it, and we think it should be done more often, but totally was basically volunteer. You could choose to do it. There weren't any regulatory requirements. That started to change with Texas implemented a proof of reserves requirement where they're starting to have, again, in the wake of 2022 collapses, exchanges have to actually do this quarterly on their own, basically share with Texas Department of Banking what those snapshots look like, and then once a year do a proof of reserves type engagement. So kind of fascinating this was something we started doing back in 2020, and to see it kind of grow to what it was is pretty cool. And then otherwise we do typical kind of general advisory services, and we don't do full tax prep, so we won't prepare your whole return, but we will prepare all of your Bitcoin and crypto for the trading bot guys that are here. I know there's a couple in the chat. We'll go through, get everything together that you would need to report on your return, and either hand that over to you or your CPA, or we have, if you need a CPA, we have partners that we've worked with that we can patch you up with. So that's really, I didn't want to spend a ton of time on our firm, and I didn't want to give you a full tax presentation. I figure when I've done these in the past, somebody's got questions in here, so we could talk about them. What I'll call out is one thing we realized was it was hard to, field. We spent a lot of time just onboarding clients. So just, all right, you might have a tax issue. Let's get on a phone, figure that out. So that's a phone call. Then, all right, you got to send us everything, and we'll look at it, then get on another phone call. So I'm really proud this worked out. Like, timing was perfect where we've launched we call it Digital Asset Business Services, DABS, but DABS self-onboard. So there's a website link there, the QR code works, you can scan that and really you'll be walked through a very brief, who you are, where you're looking for help, and then upload some other information. That'll give us enough to come at our first call with generally a pretty good plan of where we're going to go with this, give you some pricing right away so we can either help you all the way through or put you with someone who can. So if you think you've got questions or you need help, definitely come to us. And again, the other reality was most people, CPAs, are just still scratching their head if you tell them you're doing anything in Bitcoin. So again, that's right up our alley where we'll do everything they need. We'll give them the schedules. They'll know where to put them, and they don't have to worry about it. And neither do you. It's the bigger point. So very quickly, anytime you spend your Bitcoin or convert it to fiat, spending it means buying anything, you've created a taxable event. So then it's what was your cost basis when you bought it and what was the value at that time of spending. That's your tax exposure. So obviously there are more nuanced and complicated scenarios, but again, I didn't want to put you guys through every single IRS reg here and go through all that. I figured let's open it up for questions, and I'm happy to give you the best advice I can, and if I don't know right now, I'll certainly link up and get you an answer. So with that, if there's any questions, I'm happy to answer them. And it could be about the other stuff, our firm, or... Yes, sir?
When you donate Bitcoin to a charity, Fidelity's taking the position that you have to get some sort of certified appraisal, which is kind of silly because you can just go to the exchange and see what it was worth. Do you see, is that legit? And because they're terribly expensive, the people that say they're certified to do this. And do you see that going away potentially, like as the space?
Yep. Great question. So unfortunately, the IRS has dubbed Bitcoin property. So that is the baseline that then creates this issue, the issue of I'm using Lightning and I'm buying a cup of coffee for $2, and now I technically have a taxable event I have to worry about. So until they change that, we'll have these conversations, unfortunately. So that is correct. Basically, what it is with charities, if you donate non-monetary donations, so if you gave a couch, technically you'd have to do this too. Now, I've done this once in the past, and exactly like you said, we said, well, just take the tax form's pretty clear. My appraisal is the exchange account, which clearly had the dollar value, the account being sent, the time. They didn't have any issues. Now, if you're sending from your own wallet, maybe that's where you need something stronger. But again, it comes down to if and when the IRS were to challenge that. But it is true that technically, and there is a dollar threshold. I apologize, I don't know what it is, but there's a threshold of value, but which certainly, I'm sure if we're talking a whole coin, that's going to eclipse that at this point. But do not quote me. I think it was between 10 and 20 grand though. I don't think it's a low threshold for having to have the appraisal. But yeah, no, it's a great question.
So, excuse me, River said that they offer mining services now with a pool. Is the basis for coins earned at the time that the block is found, or when the money is distributed from the pool?
Yep, good question. So the question was, when you're mining Bitcoin with a pool, is your cost basis when the block was found or when you receive your funds? So most pools, they do the FPPS model, right? Full paper share. So they're not linking like a block being found to your payouts. Either way, it's generally going to be when they've credited your account with them. So I've talked to miners in the past though, where they'll let a balance accumulate on their pool wallet and then withdraw to their funds, and they'll well, that's when I recorded the cost basis, which technically isn't correct. It should be when you earn it and have the ability to withdraw it. That's now you've taken ownership of it. That's your cost basis point. If you were mining yourself or the pool did pay out only when it mined a block, I mean, it would depend on if the pool held the reward. It depends how quickly they give it to you. Because it could be at the time the block was mined if you're going to have those coins available right away in your account. But there would be an argument to the IRS of like, if they mine the block, but they don't give me it to the next day, then the next day is a fair cost basis.
Is there any industry sentiment, case law, or guidance that suggests that UTXO consolidation will make it difficult or impossible to use the specific lot method of accounting?
Great question. So when you're consolidating UTXOs, does that eliminate your ability to add specific lot accounting when filing your taxes? So what that means, just quickly, is you can, if you have the records to do this, which is why record keeping is important here. If you're able to say, look, I have 3 different Bitcoin wallets, I use them for different things, and I can key in on the Bitcoin I've spent, and therefore I'm going to apply a specific cost basis to those lots when I spend them, opposed to, I've been buying for years, I have a bucket of it all in the same wallet, I don't know when I bought what, so therefore I probably default to like an average price or something. So I would say no, there isn't any challenge yet to that, to say no. Like, it comes down to, like, what's going to happen is if you were to get audited by the IRS, they're going to say, all right, support what you put on your return. And you'd have your spreadsheet to show, look, here was my cost basis for these lots. Yes, I consolidated these into a single UTXO or a few of them, but here's that tracking movement and why my costs are still appropriate. And I don't see how they'd challenge that. We'll see when they do. They never say never, but it's totally reasonable. You have the records to back it up. And they, more importantly, I've been through one crypto-related IRS audit and then non-crypto. Like, when they're challenging, when they audit you, it doesn't mean they necessarily have a distinct, clear idea of like what you haven't reported. They're auditing you because they think that either it's random or they think there's something there. So like in the crypto world, it's, an exchange issued you that 1099G, which is a gross of your activity. It said 2 million and you only reported 10K, which in my example that I went through was right. The guy just had some trading bot that didn't do well, but it traded so much that they thought there should be more there and they were wrong, but person slowly go through that process. So my point of the story is that like they have to support, if they have a counter, like why you're wrong. And I don't see how they could, if you have the records to back it up and show where everything went when you consolidated, how they would beat that up any further. So it's a good question. Any other questions?
I got one.
Yep.
Did you ever get any clarity on the reward programs like Fold or Lolly about withdrawing?
Oh, yeah, good question. So the question is, when you're accumulating Bitcoin rewards on something like Fold or Lolly, is your cost basis as you earn them or withdraw them? So the IRS hasn't like addressed that specifically, but in the terms of credit card rewards, those aren't taxed when you receive them, so you don't have to worry about that. But in the Bitcoin world, basically my confirmation is other firms have taken the stance that yes, your cost basis is when you withdraw the rewards from the platform. So if you've been racking up a balance in those, top of bull markets would be a great time to withdraw, right? Because you'd have now your cost basis is at higher price point, and either you ride it down, and if you use it when you're down, you have the loss, or next bull market, you're not starting at the previous low, right? So that was a great call out, something I had not taken it that far. I remember looking up, are the rewards taxable when you receive them? They're not. But then the thought of cost basis, actually not until you take ownership of them in your own wallet, was a good nugget. So. All right, well, I appreciate your time. I'm going to stick around for a little bit, and you can always reach out. And if you have questions, find me on LinkedIn, Twitter, or my email. And again, grab a pic and scan the code, jump in if you think you have something, and hopefully we can help. But appreciate, as always, everyone's time. It's always good to be here. And yeah, thank you.